Good morning, good afternoon, or good evening, and welcome to the Monday, the 23rd of June, Bull versus Bear webinar. Steve Miley here on the call for trading. Welcome, everyone. We're going to go for our Monday run through, which is a slightly bigger picture look at what we had last week, what we've got coming up this week, taking a look at the geopolitical, the fundamental macroeconomic data-driven central bank events that are shaping financial markets right now. And we're going to use these two. So you remember the guys, these are in the central column below where you're watching this in the members area. The members area left-hand column has got the technical analysis reports. We'll come to those shortly. And then we've also got the middle column with the macro fundamental reports, the weekly reports that we publish over the weekend. And then on the right-hand column, you got the news from our partners at Live Squawk, who produce Squawk service, also giving the scrolling news service. So we've got the macro summary. The summary, obviously, the shortened version of pretty much the macro matters in here. So looking back, US stock averages were kind of sideways last week. We had the shortened week for the Juneteenth holiday. Nasdaq was up 0.2, the S&P down 0.2. So markets kind of edging sideways with kind of mixed signals, some negative geopoliticals and some kind of relatively positives coming from elsewhere. So the Fed on Wednesday stayed on hold and indicated two rate cuts to come by the end of the year. Still kind of cautious. Geopolitical risks were not only to have the ongoing trade tensions, but the Middle Eastern risk initially heightening as we had threats of potential the US joining the conflict through when the markets were open last week, and then obviously at the weekend we had strikes on three of Iran's nuclear facilities by the United States, so effectively joining that war effort, and threats from Iran of retaliation and warnings from the US that if they retaliate, then things are going to get worse. The conflict between Israel and Iran continues. So that's what we had playing out over the weekend. We still got trade tensions obviously ongoing as well. And remember, the tariff pause from Liberation Day is due to expire on July the 9th, so only a couple of weeks away as well. Looking into this week, it's kind of a busy week in here. So I've got the headline here: Global Flash PMI, US PCE inflation, and Powell testimony. So we've got all of that coming up. So central bank Powell is on Tuesday and Wednesday, speaking to both houses of Congress. So we have Powell. It's the same statement, but it will be different Q&A. So we'll be watching that. Today's a big day for global data, global flash PMI. Remember, that's the precursor. That's not the US ISM data. This is the data we get from S&P Global, HCOB, and that we have that data already out for Asia and Europe this morning, and we have US coming up. We'll focus on that in a second when we come to the calendar. Tomorrow, US consumer confidence always can always move markets. As I say, Powell on Tuesday and Wednesday. Initial US PCE, but more importantly, the GDP data from the US on Thursday, and probably the most important for the week is going to be the PCE data that we have coming out from the US, the month-on-month, year-on-year data on Friday. Remember, this is the excuse me. This is the Fed's preferred inflation measure, the US PCE data, the month-to-month, year-on-year data, the more important data. We do get the quarter-on-quarter data on Thursday, but really we're going to be focusing on that at the end of the week. So that's the key data. So we're kind of busy pretty much through the week. Flash PMI today, consumer confidence tomorrow, Powell tomorrow, Tuesday and Wednesday. US durable goods and GDP on Thursday, and then that US PCE data on Friday. So lots to look at. And looking at today, you can see kind of mixed in here so far from Europe on the HCOB/S&P Global data in here, the preliminary flash PMI data for June. France, both worse than expected. Germany, both better than expected. Eurozone as a whole, slightly worse than expected. And UK, better than expected. Looking into today, we get the same data for the US. the S&P Global data at 9:45 Eastern today. So we're going to be focusing on that. Also get some Fed speakers today. Bowman at 10 o'clock Eastern, Williams 2:30 Eastern. So S&P Global flash PMI data 9:45. Bowman 10 and 2:30 this afternoon Eastern time. Fed's Williams speaking today. The headlines everywhere are all about what's next. World braces for Iran's response to U.S. attack on nuclear sites. So already gold has spiked higher, but has actually pulled back from the highs. Market reaction generally quite muted. Investors buying dollars. I say gold spiked higher, and then because of concerns about interruption to traffic through the Strait of Hormuz, that was the concern there. So oil has spiked higher, but then has recoiled back lower. U.S. stocks actually up, unbelievably up, even though we've had, sometimes I did a study. God, I was at Merrill Lynch a long time ago, but I did it around the time of the Gulf War II. It was Gulf War One, Gulf War II, in the early 2000s, and I did a study on what happens when war breaks out. And what tends to happen is the build-up. There's war doesn't break out usually completely unexpectedly. There's usually some kind of build-up. Same with this, right? We knew this was potentially coming. We thought it was going to be further away. Trump sort of said 2 weeks, but we knew it was kind of potentially coming. Often what you get is once war breaks out, the market then sometimes initially spikes lower and then puts in a base and goes back higher. And I did a lot of studies on various wars going back over the last century, actually. And, it was the global stock markets were in decline right up until just before Pearl Harbor. And I think it was within a month of Pearl Harbor. That was put the bottom in on global stock markets during World War II, and various instances through the various Gulf Wars and various other wars throughout history. I did the study on. So sometimes you get this. It's like it's that kind of adage of sell the rumor, buy the fact. Okay, we know what's happened there. It wasn't as bad as expected. It seems to have done the job. It hasn't massively heightened the conflict at the moment. So, and even though oil, as I say, did spike higher, global, US futures are actually up this morning. So, US attack on Iran adds to economic uncertainty. We know that. Oil spike fades as traders await Iran's response. So oil did spike and then faded back lower. US stock futures rise as fears of oil shock recede. So not as bad. Wall Street futures edge high. So futures are up this morning as investors await Iran's retaliatory morning bid. Oil keeps relatively calm. I mean, yeah, it did spike up, but I mean, relatively calm considering in here. Asian markets in here this morning, Nikkei, little change, 10th down. Hang Seng's actually 2/3 better. European exchanges, yes, lower, but not massively. FTSE is pretty much unchanged. German DAX, 1/3% lower. French CAC, 0.5%. And as I say, those US futures, why is that not opening? I've opened this a couple of times this morning. Well, I've hit that anyway. It didn't work. Okay, here we go. It's loading now. Actually, we're showing down in here, but we were up just earlier on. So just edging back lower in here. CME Fed Watch tool in here. Actually, this is actually risen slightly, I think. But pretty much not much chance for a cut in July. But this has just risen just slightly in here. For September, we're looking at 33% chance. We're still unchanged. So probably first rate cut coming in September. And then by the end of the year, we're looking at likely 2 rate cuts. And that's what the Fed have pretty much told us. Yields stay very much contained towards the lower end of yield ranges. So if towards the lower end of this kind of range we've been in here for the last few weeks, but nevertheless still fairly contained, and we remain optimistic on bond prices, so looking for bond prices to go higher to lower yield. So again, going back to those, it is kind of pointing slightly lower in here, we think, going forward. So we're bullish on price, bearish and looking for yields to go lower. And stocks in here, we're clinging to a bullishness despite the moves lower, we said last week, despite the market undercutting some important levels in here. We're looking for stocks to rebound, and we're kind of seeing that already come through in here this morning. I'm not going to go into the charts today. I'm going to wind it up there. We'll take a look at the charts in more depth tomorrow, but you've got all the levels in here in the reports. You can go and download those in the left-hand column below in the members area. And I'm going to wrap it up there, guys. So watch out, because obviously we've got the ongoing issue with with the trade, the tariffs and potential trade war. So we're looking for information there, and now we've got the further unknowns of potential retaliatory events coming down the pipeline from Iran, and potentially an escalation from either side. So we're watching out for that. The Squawk service, put that Squawk service on. It's invaluable when we're in this kind of random geopolitical risk scenarios. So keep that alive. And as I say, just to finish off, just to go back in here, we are looking at the S&P Global flash PMI data for the US at 9:45 Eastern, Bowman at 10 o'clock Eastern, and Williams at 2:30. All right, guys, have a great trading day. Take care, stay safe. We'll be back with you with another Bull versus Bear webinar tomorrow, Tuesday.